We live in a world obsessed with overnight success. We celebrate the sudden spikes, the lottery winners, the traders who turn a few thousands into millions in a matter of weeks. We scroll through our feeds and see the flashy cars, the luxury vacations, the loud declarations of triumph. But what if I told you that true wealth, generational, unshakable wealth, is rarely loud? What if the most successful person in the room is the one you haven't even noticed? Today, we are going to talk about the power of being boring. We are going to explore why the tortoise still beats the hare, especially when it comes to your financial future and your peace of mind. Meet Kavya and Arjun. Both are sharp, ambitious professionals working at a high-tier corporate strategy firm. They sit just 2 desks apart. They attend the same high-pressure corporate town halls. They draw the same substantial salary, and they both want financial freedom. But their approaches to getting there are entirely different. Arjun is the center of attention. During lunch breaks, he's the guy showing everyone his phone, pointing at the skyrocketing charts of the latest speculative tech stocks and volatile crypto coins. He thrives on the adrenaline of the market. When he makes a profit, everyone knows about it. He upgrades his car, he wears designer watches, and he lives a lifestyle that screams, "I am winning." Kavya, on the other hand, is quiet. When colleagues ask her for stock tips, she just smiles and says she prefers to keep things simple. She doesn't track the markets by the minute. Instead, she plays a completely different game. Every month, a large portion of her salary automatically goes into unglamorous, foundational assets. While Arjun is chasing 100% returns on risky bets, Kavya is securing her money in state industrial infrastructure bonds, quietly locking in steady, guaranteed yields. She invests in broad market index funds. She lives well below her means. To Arjun and the rest of the office, Kavya's strategy is unimaginatively. It's safe. It's boring. For 3 years, the market goes on an absolute tear. Everything Arjun touches seems to turn to gold. He is hailed as a genius. At the annual corporate town hall, he is recognized for his aggressive business strategies, which mirror his personal financial risks. During this time, Kavya faces immense psychological pressure. This is the hardest part of building real wealth that no one talks about, the feeling of being left behind. When everyone around you is getting rich quick, patience feels like a punishment. Kavya watches her infrastructure bonds compound slowly, predictably, reliably, but without the fireworks. There are days she questions herself. She wonders if her discipline is actually just fear. She is tempted, just for a moment, to pull her secure funds and chase the high-flying trends Arjun is profiting from. But Kavya understands a fundamental truth about wealth. She knows that a skyscraper built on sand might look magnificent, but it cannot survive a storm. She sticks to her plan. She continues to lay her bricks, one by one, building a foundation of concrete. And then, the music stops. The economic winds shift. Inflation spikes, interest rates are hiked, and the speculative bubble bursts with a devastating pop. The market doesn't just dip, it crashes. The risky assets that Arjun leveraged his life on plummet by 60, 70, 80%. Because Arjun used margin, borrowing money to amplify his trades, his losses are magnified. The bank calls in his loans. He is forced to sell his assets at the absolute bottom just to cover his debts. The flashy car is sold. The luxury watch goes to a pawn shop. The stress visibly ages him, and his performance at work suffers. What happens to Kavya? Kavya's portfolio takes a hit, of course. Everyone's does in a crash. But her foundation holds. Her state infrastructure bonds continue to pay their exact, promised interest, entirely unaffected by the stock market panic. Her index funds are down, but because she has zero debt and plenty of cash flow, she isn't forced to sell a single thing. In fact, she does the opposite. Because she was patient, because she hoarded her resources when everything was expensive, she now has the capital to buy incredible assets at a massive discount. While Arjun is panicking, Kavya is calmly walking into the market and buying up real estate and solid companies for pennies on the dollar. Fast forward 5 years. The market has recovered. Arjun is exhausted, starting completely over from zero, still chasing the next big thing to make up for his losses. Kavya? Kavya is financially independent. She doesn't need to work at the strategy firm anymore, though she chooses to because she enjoys it. Her boring foundation of bonds and steady investments compounded silently in the background, outlasting the storm and flourishing in the recovery. Here is the lesson for you today. Wealth is what you don't see. It's the unbought cars, the skipped luxury vacations, the money quietly working for you in the background. It is not glamorous. It will not get you 100 likes on social media. Building a strong foundation requires the humility to be the boring person in the room while everyone else is showing off. Don't let your ego bankrupt you. Stop chasing the volatile spikes and start laying your bricks. The storm will always come eventually. Make sure your financial house is built on stone. Thank you for listening. If this story brought you value today, make sure to subscribe and join us tomorrow for another lesson on wealth, life, and the mind.